Hi everyone, I'm Michael and I'm here at IronFX with Charalambos Pissouros, IronFX's very own senior analyst. A day before the US elections and a second part on the Q&A session regarding this event. Now, in the first part of this US election video analysis, you commented on how the outcome will impact several G10 currencies, as well as the Mexican peso. So let's remind our viewers that your opinion on the peso is that the currency is the US election barometer and that it may tumble if Trump is elected, mainly due to his protectionist stance, of course. However, the peso is not the only currency which could be affected by the trade policies of the next president. So which other currencies do you see taking a hit from the trade plans?
Basically, the US has been promoting free international trade treaties for the past few decades, so an 180-degree turnaround could have a serious impact on the respective currencies of its major trading partners. Trump has called for an import tariff of 35% on Mexican goods and 45% on Chinese imports. China is the top exporter to the US, and therefore, besides the peso, the yuan is likely to suffer as well if Trump sits in the Oval Office. Other major exporters to the US are India, Taiwan, Vietnam, and although not exactly an emerging market, South Korea. As a result, the currencies of these nations are likely to depreciate as well in case Trump wins, while they could see a relief rally if Clinton is elected. Now, among the G10s, the US has the largest trade relationship with Canada. Needless to say, the loon is unlikely to avoid the heat. Okay, you can argue that Japan has close trade ties with the US as well, but I called for the yen to strengthen in case of Trump winning. I believe that the yen will react mainly as safe haven, given that Trump is possible to spread risk aversion. Therefore, we believe that cut JPY may be one of the best ways to play this event. If Trump is elected, the pair is likely to fall off the cliff, while it may surge in case Clinton wins. Indeed, the overnight implied volatility of this cross has exceeded its Brexit peak.
Okay, all right. So now let's turn to the monetary policy. So Trump has recently been a vocal critic of low interest rate policies and advocates for replacing the Fed chair, Yellen. Now, to what extent do you believe that a different chair of the Federal Reserve will affect the US monetary policy?
First of all, something like that would cast doubts as to whether the Fed is truly independent if a sitting president starts interfering with monetary policy. We also think that this would be a sign of instability for international investors, as it could mean that every time that a president is elected, he or she can directly intervene in monetary policy decisions by replacing key Fed officials. This is not how democratic economies work. There is a reason why central banks should be independent. Now, should Yellen and possibly some Fed board governors who are permanent voting members of the FOMC be replaced with more hawkish individuals, that would likely lead to a more hawkish committee overall. Thus, it is possible that under such a scenario, the pace of future rate hikes would be faster than currently anticipated by the FOMC's rate projections. However, we need to note that although federal officials are appointed by the president, they also need to be approved by the Senate, implying that even Trump as a president may not be able to influence Fed policies as much as he would hope. On the other hand, a Clinton presidency could have little effect on monetary policy. Yellen was appointed by Obama, with whom Clinton shares a lot of her policies. This suggests that Clinton is unlikely to replace Yellen. This argument is enhanced by the fact that Clinton has not commented on monetary policy, implying she is unlikely to seek changes to the status quo.
Okay, well, thank you very much, Charalambos. Thank you very much for you guys watching. I am Michael, and this is
Charalambos Pissouros, Senior Analyst at IronFX, wishing you
solid trading.